Hello and welcome to a new series where I'm going to talk about news related to cryptocurrency, which are relevant to trading, investment, and technology. I hope you'll find this interesting. As the goal, I will record a video every few days where I'll mention things that I have found interesting. But to start with, I'll just go through the news from the early February. I hope you'll find this interesting. These are certainly things that are on my mind. These are things which I deem important. Hopefully, you will find it interesting. Please like, comment, and subscribe. Please look at the links below. There is free money there. There are some large discounts on trading fees, so please have a look. So let's start with early February. We all know about the coronavirus outbreak, and it has a tremendous impact on the Chinese economy. There are no flights, no parcels traveling, because we all know that parcels are traveling in the passenger planes. So the Chinese stocks have tanked 9%, and this is only thanks to the Chinese government intervention. So the government decided to buy stocks, buy currency to prevent it from free falling, and it's a very risky tactic. If it keeps falling, they will be forced to continue buying, and at some point it can get nasty. Now, it's not to say that I am bearish on China. I'm very bullish. I think they'll do great. I think they have a lot of catching up with the rest of the world, and catching up is always easier than being the kind of first world power like US is. So I am very positive on how China will develop over the next years or decades. This is what has been on my mind throughout the month. Extensive open interest and massive positive funding, implying that people have borrowed a lot of money to go long crypto. So they have borrowed a lot of USD to go long crypto. On this chart, we can see that on these main exchanges, people have borrowed $2 billion to go long crypto. Actually, to go long just BTC, and we know that they are all buying because of the massive positive funding. So the gamblers are going long. They are borrowing money USD to go long Bitcoin, while arbitrageurs are taking advantage of that funding. They are shorting and they are buying physical BTC to hedge. As the price goes up, the gamblers will be happy. They will make profit and pay small amount of funding, or maybe not so small, but hopefully insignificant, and the arbitrageurs will be happy. They never planned to participate in the run up. They will be happy with their arbitrage gains, so they'll be happy with the funding that they'll receive. So everyone is happy. Win-win for everyone. There's a new kid on the block. It's Tether Gold. So this is just like Tether, but it's pegged to not to USD, but pegged to gold. I think it's a great product. It will have Lightning, which will make it fast and anonymous. I think this is great. However, I probably would prefer a bar of gold over some Tether Gold, mainly because of some minor risks that Bitmex is facing. So it's a great exchange. I think it's the best in the world. It has certainly most advanced features. I love them. I'm a Leo back holder. However, I would try to reduce my exposure to risks associated with Bitfinex, and buying Tether Gold is exposing yourself to such risk. So until the New York Attorney General case is finished, and until the cases that class action lawsuits are dismissed, I will try to reduce my risk related to Bitfinex. This is the Tesla madness, so it has gone up just like crypto, so it just highlights how bad people are at pricing stocks. And if Tesla can do this, Bitcoin can certainly do way more, a way more severe move than this. Here is the Travis estimate for Tesla before this move. So they thought that it was overvalued at 400. It went to 1K. So you can see how these guys are clueless about valuing things. This is hilarious. United States has sued 7.2 BTC, which is hilarious. how can they be so dumb to sue a number on the ledger? It's funny. Hear me again talking about how mind-blowing is the open interest. Here is a nice daily volume chart. At the beginning here we can see Bitmex is unchallenged late 2019. Here FTX is growing volume, but Binance is growing volume a lot. I believe small part of the Binance volume is fake, but overall it is a contender and it is taking part of the Bitmex market share, and I think this is an important development. Here, my guess, I thought that there will be a 5% drop in ETH/USD or BTC/USD. There wasn't. I was wrong. There was a dip over 5% later on, but not within 24 hours. You can see how easy it is to be completely wrong. Here, an interesting change of narrative. Bloomberg, a very well-known kind of participant of markets. So they supply Bloomberg terminals, and they are like a news outlet. So it's interesting to see how the narrative changed from altcoins inflate Bitcoin supply to highly speculative and oversupplied minions. So a kind of separation of a narrative, and people are generally warmer towards the whole crypto space, which is amazing. Here, me highlighting how important it is to survive, how risky it all is. I was pretty convinced that ETH and BTC would go down. I was, if I was a gambler, I would probably just short it all, and I would have ended really badly. So I'm glad I didn't. Here, I actually couldn't resist, and I did open a small short. So it was around 9.7k, and I wanted to put a stop loss at 9.8 because the price has been explosive, and I certainly don't want to be left behind. So I've opened a tiny short gamble, and I was obviously wrong. But what you might find interesting is how I structure stops. When I was scalping a bit more, this is how I structured my stops, and the main intention here is to be a maker, not a taker, because being a maker is much cheaper on these exchanges in comparison to being a taker. So it was around 9.7. I wanted to be stopped at 9.8. So this only works when you have an empty account and then you open a gambling position and you want it closed as a stop. If you have, if you only want to close part of your position, it wouldn't work. So you have to close your entire position for this to work. So as the price goes up to 9.799, there is a stop limit trigger. So you set it up here on Bitmex and you make it trigger with the mark price, or you can change it to index price. It doesn't matter much for the perp, and you select close on trigger. That way this can only reduce your position. So this stop puts a limit buy at 9797. So if the price goes here and then goes down, this is where I buy and close. If it's closed, then all these other orders are cancelled because it's closed on trigger and they have nothing to close. However, if the price goes here and my limit order doesn't get filled, there's another one, and it's 9801. At 9801, there is a new order. So I've structured this so that each of these orders is half of the value of my position. So if this triggers, then this triggers, and you have two orders which are 100% of my position. If the price goes up and these are still not filled, then there is another stop which is placed here, and this one gets cancelled. As we go up, another gets triggered, and then we are left with these two. As it goes up, another triggers, and then we are left with these two, and these are cancelled because it's close only order. And then as we progress up, and as this doesn't close my position as a maker, then at 9813 I close as a maker. Sorry, as a taker, as a market order. and this has worked pretty well, and I recommend this way of dealing with the stops. So here is the explanation of that. Now, interesting thoughts about DeFi. So decentralized finance, this is what's being built on ETH blockchain. So when someone says 1 billion locked in DeFi, what I see is that people who had their bulletproof cold storage ETH hidden on some ledgers or in safes, now it's locked on the blockchain, open to speculative madness, to speculative attacks, to dumps. So it has been bulletproof. Now it's kind of house of cards. If someone cheats the oracle or cheats the price or causes a flash crash, they will be forced to liquidate at a very unfortunate price. Very risky. And over the past few weeks, there were some big incidents. So that was actually quite predictive of the future. And another interesting thought is that DeFi isn't really competing with banks. It's more competing with pawn shops rather than banks, because you go to a bank, you get some money, and they trust you that you'll repay it. In DeFi, nobody trusts that you repay them. You have to leave more than 100% collateral to get some funds. So, just like in a pawn shop, you leave the watch and you get some money. And if you don't return the money, they make profit because your watch is worth more than they have lent you. So just an interesting thought. Now, how are we doing for time? 12 minutes. So I can bang on for a bit more. I am a fan of Real Vision. They are a bit too bearish, but overall they are very interesting. And it's interesting how boomers are now talking warm about crypto. In the past, it was only the young guns, but now a lot of older guys, and they are managing clients' funds, and they will be telling their clients in the future that actually crypto is interesting and should be considered, and it's actually a good risk-reward thing. And imagine all these highly regarded fund managers telling their clients go into crypto. They will listen and they'll do that. Interesting macroeconomic view. Interest rates falling off the cliff since the 1310. So the rates have been going down, and they continue going down, and they will be negative. Very interesting. The governments cannot afford positive rates now. So if the rates go positive, they will have to default. Very interesting. Very bullish for crypto as well. Here a few posts about how automation is risky. So here Grossbit says how a small mistake can lose several million bucks within 1 minute if it's poorly configured, and there are no refunds. And here's my story. So in 2017, there were a lot of market maker bots who thought that the true price of crypto is what you see on exchanges. That's not true. The true price was on Bitmex and on OKEx, and every move originated there, and they were just not aware. So you could take advantage of that. Obviously, they are now fully aware of what's happening. But yeah, that was a good opportunity in 2017. Now here I am praising CoinFLEX. It's a new exchange. I think they're all right. So the market standard is 0.005% fee for a transaction, and on MEX it's 0.0075 for taker, and so it's a fee, and 0.0025 rebate for the maker. So it's profitable to be a maker. But CoinFLEX has actually 40% of the Bitmex fee if you hold some CoinFLEX on the exchange. So it's to be expected that the fees will just continue going lower. And here is my ref link. Here, a very interesting opportunity. So Bitsy is an interesting exchange. They have some affiliation with Blockstream, and I highly regard Blockstream. So there are guys who have opened an exchange in Dubai, and they have licensed themselves wrongly under the wrong license. So that's a red flag, and they have moved to British Virgin Islands, and they are starting an exchange. I think it has started operating properly last year, and they are looking for some large amount of funding, I think 50 million or something, and they are doing an ICO or initial exchange offering on Liquid, and this is why Blockstream is interested. So overall, Bitsy is a little bit risky, partially because of these regulatory issues, and partially probably because of the fake volume. So I believe that part of the volume on Bitsy is fake, but they certainly had very cheap June and March contracts. This discount has disappeared by now on March ones, but it's still out there on June ones. So you can go there and you can buy the June contract, and that arbitrage will give you 0.4k per 1 BTC. So it's still a significant arbitrage, but there is a risk. It's not as safe of an exchange as MEX, as FTX, as Deribit. So proceed with caution. I think it's an alright opportunity, but it's a risky one. It was a much better opportunity at this point when I have tweeted this. I believe that Bitsy will stay afloat at least until March, when they are looking for funding, so they will get their 50 million. What happens afterwards, I am not 100% sure. They are printing some pretty large volumes. You can see them on austerity sacks. There is a nice chart. So they are saying that they are bigger than Kraken futures. I think that's not true. I think their volume is way lower than Kraken futures. So I think they are slightly inflating their volumes. I think they are slightly inflating their open interest on perpetuals. But yeah, we'll see how all this unfolds. I wish them all the best. And I think with this news, I'll finish. I'll continue with the February news in the next episode. Thanks for watching. Please like, comment, subscribe. Please look at the links below. There is some free money. There are some good discounts. Thank you. Bye.